All right, so like we go over to the SPX. All right, so let's just go out to Friday. So we've got 13.34% implied volatility going out to Friday, this week's Friday expiration. Implied move of almost 48 points on the S&P. And if you pull up an options chain, there are two main things that we want to look for here as it relates to unusual options activity. So we have open interest and volume. Yeah, it's on the put side, right? And of course, you'll have that also on the call side. So we got volume and open interest. Okay, and these are two very important metrics that give us a lot of clues that are often overlooked. So trading volume and open interest can give us inside clues to trading activity, as well as like liquidity, right? So often when you see a lot of volume and open interest, you see tight bid-ask spreads, and that gives us a clue that we can get into and out of these trades easily. They're liquid. Now the volume here, we first want to understand these and then how they relate. Volume simply tells us how many options contracts are traded in a session, and so this actually changes intraday. So throughout the day, you'll see changes in volume. And it's basically telling us, okay, at the 49.50 strike, there were 5,591 put contracts traded. So it's pretty simple. Like it's the number of contracts in a trading day. And it's calculated by taking the total number of contracts that were traded in that period. So, if somebody buys 100 49.50 strike puts, and then trader A does, and then trader B buys 200 of them, right? That's going to add 300 contracts of volume. So it doesn't matter if the contracts are bought or sold. It doesn't matter if it's a call or a put. If there's a trade at a strike, for those contracts, it's going to affect the volume. Okay. So it's basically how many contracts have changed hands between buyers and sellers on that day. Okay, so this is going to reset each day. Volume is important because it can tell us, number one, it updates on an intraday basis, and it can give us clues if there's interest in either the put side of the chain or the call side of the chain. And even if we don't know something that's driving it, it gives us a lot of clues. So maybe we're not aware of a quarterly earnings coming up, or there's some information about the company just we're not privy to. And this is where it almost gives us like an insider trading advantage. We can actually see things and not necessarily even have to know what it is, because it tells us, that there's interest. There are trades taking place between buyers and sellers at that strike price. So it's not necessarily important to know exactly what it is. We just want to know, what is the volume? We can see obviously significant differences between strike prices. Now, open interest works a little differently. So open interest is the total number of contracts currently open at any particular strike price. Um, so like for just going down on the put side of the chain, the first kind of big outlier that I see, because we're going 16, 7, 12, 9, 8, I don't know, all of a sudden we jump up to over 3,600. So we have 3,600, 38 open interest at the 50-50 strike. Um, Now, what that measures is all of the long positions that are held um, at, at that strike price, but haven't been closed out, haven't been exercised, um, haven't expired. Obviously, we're not at March 1st expiration yet. So this is going to tell us all of the open long contracts. Um, and of course, they report it for both puts and calls, just like volume. Um, This number does not update during the trading day. Okay, open interest. So like when you get up in the morning, the market opens, you see the open interest, it's going to stay at that because it's from the previous day. Um, so this will update after market close, and it will remain at that number for tomorrow's trading until it updates again after market close. Um, so it can go up or down depending on whether or not contracts were open or closed that day. So similar to volume, which we can see intraday changing, we want to track the change of it. Well, two things. We want to track like, is there um, some sort of an outlier where we see like a big spike in open interest? Um, 12,000 contracts all the way down at 49.50, which is a 4 delta. Okay, these could have been sold long ago, out of the money puts. They could have been bought for, well, I mean, for open interest, it would be long options. So those could have been bought for hedging purposes. So obviously you want to kind of think of what the context is. There's not, and what we're going to look at now is open interest versus volume. Okay, but see how, yeah, there's pretty good volume here when you correlate it to other strike prices over 5,500 contracts. The volume is much less than the open interest. So that kind of tells me that probably these are long contracts that were used as hedges, you know, previously, and they just didn't play out because the market hasn't sold off. Where it becomes critical is when it's relative to the volume of the contract. So what we generally look for is for volume to exceed open interest on a given day. And that is where unusual options activity comes in, because it gives us a clue that the trading in that option contract was unusually high that day. And when there's unusually high activity, it's often due to institutional buying. Somebody's got, I'm not saying making claims of insider trading, but somebody's got information that we might not be privy to, or we could theoretically access it. We're just not aware of it. So it gives us a lot of clues. Um, so we look for, okay, is there volume that's exceeding open interest? And I don't see any here. Any of the big numbers. I mainly look at the, you know, large open interest strikes. Okay, most of these volumes are under open interest. What about on the call side? Let's see. Here we've got some unusual option activity on the call side, the 51.20, 51.25 strike. So these could be, so the volume, today's volume is greater than open interest. These could be speculative bets on a run up in the S&P following the reports that are due out. Not extremely notable, but we're seeing it on the call side, not really so much on the put side. I mean, there are some. Oh, there is actually one I missed. There's a 50-40. Okay, so this actually 50-40 strike has. This is actually it seems to kind of supersede anything I'm seeing on the call side. This is at a 23 delta. There were over 6,500 contracts traded at the 50-40 put strike today, which is about a 6x, 6 times the open interest. So this is actually some unusual activity on the put side. So like when I see this, okay, well, this might be, the smart money loading up on a hedge or speculative bearish position around ports due out this week. So that's actually interesting. I missed that previously and just noticed. Okay, um, so then let's go a little bit deeper into how to do that, like use this information. And then I'm gonna give you a couple tools where you can scan for these things. You can actually do it in Thinkorswim. They have what's called a sizzle index. But just kind of give you some basics here around trade, some ideas for trading unusual options activity. So here's a couple kind of ideas for trading this. So if you get like a bullish move in a stock, and you see, I'm just going to abbreviate open interest OI. So if you see open interest increasing, that can be used as a confirmation that there are new long positions. Okay, so that would be the cool thing about this is, you can use this without even looking at a chart. Like you literally can trade off options day without ever looking at a price chart. I'm not suggesting you do that or saying you have to, but this is actually probably more reliable than trying to use technical analysis on a chart to forecast price. I like to use them together, but that would be one instance. But then let's say like you have similar initial case where you got a bullish move in a stock, but open interest is decreasing. What does that mean? That could be a bearish indication. Okay. How so? It generally signifies that, and this you'll often see this after a big bullish move, that it's losing steam. Okay. So bullish, or let's just say uptrend, losing steam. Now let's say there's a bearish move in a stock. Okay. And open interest is increasing on the put side. All right, so the stock's going down, open interest is going up on the put side of the options chain. What does that mean? That would tell us so that would be bearish. So it would tell us that it would indicate basically that there are new bearish positions being established, right? Because people are buying puts. And often when this happens, we see sell-offs accelerate or gain steam, or we see a bull trend reverse to a bearish trend as the stock starts to move down, while simultaneously open interest starts to go up on the put side of the chain. Right. The last one would be okay, so also bearish move in a stock. Open interest, okay, is decreasing. Okay, so we got stock going up. Stock going down. Sometimes it's hard to keep all these straight. Stock's going down. Um, Open interest is also going down on the call side. Okay. And that tells us that people who had previously bought call options, meaning they were bullish on that stock, but now the stock's going down, and the open interest call open interest is also going down. That can create a squeeze. So it could be people that had previous open long call positions that are now being forced to close them and take losses. So this is also bearish. We're talking about all these like short term. So that equals potential bearish indication on the stock. All right, so those are kind of the four ways that I like to use open interest as a trading indicator for direction. And then I add in the volume and look to see. So the volume is kind of the confirmation for me. So like if I see any of these scenarios, and then I also see volume, daily volume, because remember volume updates intraday. If I see that exceeding open interest and it lines up with one of these four scenarios, that is unusual options activity.